After 7 weeks of falling on the ASX and the NASDAQ and growth shares are seeing higher highs, we go to Gary Glover and ask him what we can learn from history and whether there's a turning point on the cards. Good morning, Gary. How are you?
Yeah, I'm great, Chris.
We're looking at your report this week, and you've got a few trading shares in there that we'll cover in a minute. But the summary that I'm reading that came with the email and the report was that you're looking at some timing and aspects of the market. What's coming out and popping to you in this 7 weeks of dragging down, but the growth shares seem to be sort of edging higher? What's standing out to you here?
Yes, I mean, I guess there's nothing sort of too new in here. I mean, I think it all sort of feels pretty average out there. But as we know, Chris, the market's sort of got a habit of climbing the wall of worry, historically. And so I've always sort of felt this was going to be sort of similar to 2002, 2003, sort of kind of a bit of a building process there. If you remember back there, our market actually weakened off because we're sort of commodities, so they sort of their last sort of asset class to sort of maybe have their decline in sort of bear phases, and so usually means that sort of our market, I think our market found a low in March 2003, whereas the US market found a low in October 2002. But yeah, so we're starting to see growth starting to move a little bit here. It's still a bit of a hard-working rally here, so it's definitely not impulsive or not overly spectacular so far, but it is a bit of a grind here. It's sort of one thing I sort of noticed there. Like there's a few days there. I think there was a Fed meeting there last week where the news wasn't so good, and the market had a massive range that day. So basically sort of opened up, quite bullish. And then it finished down after sort of Yellen and the Fed sort of, had Powell sort of spoken. And so at the end of the day, we had like an outside bearish reversal in the market on the daily. So that's normally a pretty bearish sort of pattern there. But if you look under the hood, the volume was about 80% of the average volume for that day. I thought, wow. Yeah, so it's kind of like your Wyckoff. If you see that big wide range day, news related day, and then the market drives down, and when you go through a wide range there, you should go through a lot of buyers and sellers. So the volume should be pretty high. So when you see the volume light, like lower than average on what should be a big day, that's sort of quite revealing as well. So that's kind of, for me, I sort of saw that and thought, wow, that should have been that should have been a day that spooked the market. There should have been some aggressive selling, and we should have moved through a lot of lines in the market. And we didn't see that. So, and that's kind of typical of sort of what the market is there. We've had plenty of bad news here, but we're not seeing any aggressive selling. So I just think this is going to be a bit of a churn here, a bit of a hard-working rally, a bit of a building process there. We showed some of those sort of midterm years, how we came out of these cycles, and also our sort of second and third years as well. So just probably not going to be the most bullish, following the midterm year low. Maybe not the most bullish third year of the decade, but so far it's kind of constructive. So, I mean, technically there we've sort of got these sort of pennant flag breaking out here. I mean, the NASDAQ 100 actually has already gone to a new high. So it's actually taken out the short-term high as well. So we're seeing some real strength in some of those sort of growth stocks, and technology stocks are actually outperforming in the US there. So, it's similar to what actually happened in 2002, 2003. It just took a little while to get going. A bit of a grinding process there. I was actually looking at a couple of the Wyckoff accumulation charts the other day, and there's sort of, I think there's a sort of this. I think the schematic one is sort of where you sort of retest the low about 3 times, and you finally have that final capitulation, and then the market reverses, false breaks, and then it goes up aggressively. And that's kind of like that's the number one sort of setup. And then the second setup is really, you go back and retest that low, and then you have a bit of a bounce, and then you do a really time consuming lower high, and you start building from there. And that's kind of that's the setup here at the moment. We're just sort of, it's a bit of a grind here. We do have a higher low in place here now, a second higher low. So it's constructive here. It's just sort of, we're just not seeing big volumes on the not seeing massive volumes on the up or the down here. We did see a little bit of volume at that sort of March low there, mid-March there. Sort of definitely saw some, when the banking stuff was looking a little hairy there, we saw some good bounces there and some good volume there. So we actually saw, I think I saw about 2 or 3 accumulation type days occur down near the low there. So not seeing any really aggressive selling here on what I consider to be sort of pretty key bearish days, and probably seeing a slightly more bullish action on the heavier lows, but we're just not seeing accumulation sort of style volume too often here. So there's a few stocks are looking okay, but a lot of them are just doing, kind of grinding it out, making higher lows and building and going through consolidation phases. So what we're going to do here, Chris, is look for the stocks that have maybe had an impulsive bounce, and while the market's had this sort of pullback, look for the stocks that are holding up the best here.
Well, that's that relative performance that you often talk about, isn't it?
Yeah, that's right. Yeah.
Well, no doubt there's going to be some of those in the shares that you'll look at in a second, the trading shares. Just to quickly check off the other indices, you've talked about in depth just there how the US is playing out and what's happening with news and so forth. The S&P 500, you've noted here that while the NASDAQ sort of had 3 higher lows, the S&P hasn't had higher highs, but it's also had higher lows as well. Is that sort of echoing the same movement that you were talking about with the NASDAQ and maybe higher volume into this mid-March pull-off with the banking issues?
Yeah, so I guess the slight difference there with the S&P is we've sort of got that trading sort of range there, and then we're sort of broken out of that range, come back and retested the range, and then we're starting to bounce from there. So I haven't sort of seen the follow through yet. We saw a little bit of volume at that sort of first high low there, that sort of mid-March low, but last week didn't sort of follow through, like as in it didn't show sort of really strength there. But technically, this hasn't done anything out of the ordinary. So, I mean, if we're just looking at the chart, so if we blocked out all the noise, so if we're sitting in a room and we weren't listening to all the negative news, all the reasons why the market can go down, and all the comparisons of bear markets of the past, if we were just sitting in our room and looking at the price action and the chart on its own, looking at the volumes, it's constructive. So I mean, definitely been more bullish markets, been more aggressive markets here, but this is actually a constructive setup here. It's actually got a higher low, second higher low in place. Coming back to retest the break zone is very common, actually, extremely common. And yeah, so far this is still sort of pretty constructive here. So I'm not seeing the bearish price action that everyone's fearing out there. Everyone keeps talking about. When I see the amount of puts that are getting traded and how bearish everyone else out there, and just how negative everyone is, I just sort of know that's sort of typically what markets typically climb that type of arena of emotion. It's funny, you got to sort of study history here, but climbing the wall of worry is very normal. So just feels like that's exactly what we're doing here at the moment, and that's often the sort of the first stage here of sort of following a bit of a washout or a bit of a low as well. So you really sort of takes a little while for the market to get confident. And, it's like everyone's going to be negative, scared at the lows. They've got to be, concerned, in the early stages of the bull market, sort of, climbing that wall of worry. And then once everyone starts to get sort of more confident there, then, that's when the rally can sort of open up. And then everyone gets sort of overconfident. Oh, there's no way this market can go down. That's the point where we got to start selling. So we're sort of, I think we're really only in that sort of first or second stage here of this market. So, if you do study Stan Weinstein's sort of stage analysis there, you will see that there are a lot of stocks that are just starting to break out sort of stage 2. So not heaps yet, but there is definitely some of the leading stocks there. I saw someone on the weekend say that the top 5 stocks in the US market weighting there are all basically in stage 2. So I haven't had a chance to verify that, but I thought it was an interesting tweet. But definitely seeing a lot of stocks definitely moving into sort of stage 2, starting to sort of break out of these sort of congestion patterns and break out to a new high. Like the NASDAQ 100 has gone to a new high. So there's a lot of stocks like that as well.
Well, that's positive to see that, and hopefully we can grab some good trading shares to participate in that sort of movement. You're talking about the wall
You're
of
just
worry.
not seeing super high volumes there, Chris. That's the only thing there. Sometimes you see really aggressive volume, and that's when you can kind of that's when you see big moves in the market. We're probably just not seeing that super aggressive volume there. There's maybe a couple of stocks that are showing it, but predominantly majority are sort of, kind of only showing mild volume. So that's just sort of showing sort of more of a, maybe that's a range bound market, or maybe that's an inflation sort of style period there with, like the 40s and 70s. So the thing we sort of know from the 40s and 70s is that even if inflation, doesn't disappear, even if inflation just subsides, that can cause a pretty decent rally in markets. So I'm concerned here that we're probably just seeing that, we are seeing that sort of style of trend here, similar to 40s and 70s. The good news is that you can still have a pretty decent move. You're just maybe not going to have the big breakout sort of, awesome bull market that we hope for. But we can still sort of see a decent move here.
Well, you've mentioned volume and you've mentioned worry, the wall of worry, but for the Aussie, it's a different kind of worry that a lot of investors are looking at because, as you said, the leading shares in the US, the growth shares have been edging higher, but your report also highlights that we're seeing 7 consecutive weeks of the Aussie market coming down and sort of retesting these lows that we saw sort of late 2022. How are you reading this Aussie movement just for the chart itself? I'm noticing some green lines. So that might be a hint of what you're seeing.
Yeah, so whereas we probably haven't seen the aggressive selling in the US market, we've probably seen a little bit more robust selling in the Australian market. And yeah, we have broken that range there. So yeah, 7 weeks down is pretty decent move. That's, we haven't had too many periods like that for a while. So normally sort of 6.5 weeks and, say 3.25 weeks, they're often sort of turning points in market. Sometimes they sort of go up and down in those sort of timings there. So always sort of, 6.5 weeks is always a bit of a timing just to sort of keep an eye on there if something's gone up or down for that sort of time period. So just notice we've sort of come back to, a bit of a key range there for me. And sort of come back to retest that previous low. Just a few markers down there around that sort of, I think it's 68.50, 68.80, something like that. So yeah, so I just think we'll probably see a bit of a bounce here. The key here is just to sort of see what type of bounce we get. If we see a bit of a bounce on light volume and it's a bit of a grind or not impulsive, then that'll be a bit of a concern there medium term. But if we can see a bit of a volume, let's get some good buying here, more aggressive there, then maybe we can bounce a little higher there. It's just my concern there where the Aussie market has been, it's really around resources, commodities. We're sort of seeing that, a lot of these coal stocks and the oil stocks have sort of fallen away. So, and then we're just starting to see materials starting to fall away here just recently as well. So again, it's just the normal cycle is for them to be a little bit later in the cycle on the decline sort of stage. So that's always been my concern with the Aussie market, is that we just might find a low slightly later than the other markets there. It's just something that historically has happened. So may not definitely happen here. It's really a fight of, it's really that inflation, sort of is the key there, because obviously, high inflation means your sort of commodities will stay buoyant. But if inflation does sort of ease off, then those commodity prices will continue to fall here, and that's probably the concern for our broader market. So to me, it's a bit, as I mentioned, I can be wrong or right there, but it's just I find it too hard, because I think like one of those scenarios there, even if inflation doesn't sort of disappear, if it just eases enough here or slows off a little bit, that's going to be enough for some of those commodities to sort of cool off and have a pretty decent pullback. If I see them sort of sell off a bit, then I might get interested after a bit of an aggressive sell-off. But we're still sort of seeing them sort of churn lower here at this stage. Commodity Charts are all sort of turning lower as well. So just, yeah, to me, just, I'd rather sort of look at other sectors here.
Well, we'll have a look quickly at the Dow Jones because it's a little bit different to the NASDAQ and the S&P 500. And you've mentioned in here the 20-year and 60-year cycle. We mentioned them briefly at the start, but the 20-year and 60-year, you're saying that this is also not looking as good because you were talking about the 03 years for the S&P 500. How's this looking?
It's funny. Yeah. Yeah, because obviously out of the October low, this was the leading index. So it really fired up pretty aggressively. And then we've had a little ABC pullback there. So come back sort of, just below the sort of first little swing high. So that's quite normal there. It's actually sort of got a little, it's almost like an inverse head and shoulders pattern there too, Chris, across the whole low there, which is quite a normal setup there. I sort of don't really like the head and shoulder pattern myself here, but I do like symmetry in markets when I sort of, markets will sort of tend to, it's like this fallback technique, they'll tend to sort of mirror themselves out of a particular price. So that October low, the market might mirror itself back out of that point. So, take the same path out as it took in. And yeah, so we're sort of seeing that here, and you'll see high lows. Obviously this went slightly higher. We'll see a little pullback here. We can, can rally, pull back, rally again, pull back a little bit and go back to that high there. So that's looking pretty constructive there. It's funny actually, interesting, the last few days on the Dow actually showed a little bit of outperformance there. And I was reading something on the COT report, which is sort of it's just basically sort of commercial versus sort of retail punters, and just showing that the Dow's showing a little bit of strength the last few days. So it's sort of something that did actually out of that October low. So yeah, we just maybe we might see this, like the NASDAQ has been strong the last few weeks, but maybe we might see the Dow sort of slightly outperform here in the next couple of weeks there. Just starting to see some early signs of that here. So, but yeah, that'll probably mean more value might get going as well here. So yeah, if we see a little bit of value start to move and the growth continue to keep going here, then that could be good for the US indices here.
Well, that leads us to drill down into the trading shares side of things and try and find those in your report that could be an opportunity. Now, Reece is the first one that you've got here. It's churned out a sideways bottom while the market's been pulling back. So as the market's been making a lower low in October, seemed to make a higher low. We touched down sort of December 2022, sort of false break maybe. And then this is interesting here. So how do you interpret this chart?
It's interesting, and it's also very typical of the current sort of phase of the market, Chris, as well. So this is sort of had that sort of low there probably earlier, while the market was sort of finding a low in October. It actually found a higher low. So that's actually showing a little bit of relative strength there, but didn't really get going there. Sort of stayed within the range there. Came back, made a little false break, which we're sort of seeing within a lot of the markets at the moment. A lot of range sort of testing. And then it did have an impulsive rally out of that sort of December low. And then since then, we've sort of really gone, well, the market's pulled back 7 weeks pretty strongly, actually, really pretty decent pullback really for the XJO. This has really just had a bit of a sideways correction now. It's pulled back a little bit there, but really the whole thing is pretty constructive there, and just more of a sort of sideways, sitting on top of the previous high. So that's kind of constructive for me.
So impulsive out of December, fast, lot of movement, and then more correction in time to sit on the previous high.
That's right, yeah. Well, if you just count there, basically we've out of that low there, we're literally 1 big week up, 2, 3, 4 weeks up, probably a 5 is an inside week. So 5 strong weeks up, and then we start to go down 1, 2, 3, 4, 5, 6 weeks, and we really haven't even come back half of that range. So you sort of got to look at this sort of relative to each other. I know people just look at sort of up and down here, so we've got to look at how the market, you really got to look at the stocks that sort of go up really quickly, and then when they sort of go down, they go down sort of slowly here. And this is why that sometimes the pullback is what we're looking for. That's more revealing about the strength of the stock here when we see sort of pullbacks here. So, and the other sort of key thing there, Chris, as well, which is typical of the market there, is through that sort of period there, even the impulsive move and the pullback there, the volumes haven't been heavy in either of those periods. So normally, like if we're super bullish, we'll be having a big volume rally, impulsive move, and moving through that, and taking the big volumes, and then we pull back on lighter volume. But we're probably sort of pretty even keel on volume, so sort of more of a modest sort of build. And that's kind of more of a base building type of behavior here. So that just kind of tells us that this is still not, still building here. Still might take a bit of time here. So what we want to see is eventually we will sort of see some impulsive move and then some volume get going, and that'll maybe when the trend can really open the shoulders. But at this stage, we're not sort of showing characteristics that are showing we want to open the shoulders yet. We're still sort of building slowly here. And that's sort of why the market's a bit boring here. It's been probably pretty hard to make money the last couple of months just because it's been, sort of, I feel like I've been sitting in trades for a long time here. And normally sort of, we'll turn things over or get stopped out of things here. But just feel like I've sort of, had the same trades on here for the last month here. So, and yeah, some will move up and then they'll come back, and then they'll go up a little bit and come back. It's just a real grind here. But yeah, this is one that's definitely more constructive. I think it's sort of looking positive there. It's just interesting as well that Reece is sort of plumbing sort of around the home sector as well. With the interest rates heading higher here, obviously house prices sort of cooling off here. That's sort of negative for that sector. There's been a little bit of talk, obviously some of the builders, particularly in Australia here, have sort of been a few of them gone under here recently as well. So it's sort of putting negative pressure on that sector. But market always looks ahead, so it's always thinking, okay, normally the market will turn up maybe sort of 6 months or, maybe even a bit later than the low in the cycle. So, if we wait for the cycle to find a low and then buy the stocks, they're too late. They're already heading up. So you sort of got to be sort of thinking, are we maybe another 6 months of pain for the sector, and then that's it, and then we turn around. That if you can sort of get to that point, that's often the point where the sort of stocks find their lows, where everyone is not interested in that sector, and everyone's probably advising everyone not to buy in that sector.
Well,
that's usually when you should be looking at that sector.
We might use that to jump over one chart and go to James Hardie, because similar space, it's construction, building companies. And I know last week, so this is echoing what you've just said, Brickworks, they announced that they had, with their results, their outlook was that they noted that there was a short supply of labour, and that was keeping the backlog of building, that was keeping that demand for their bricks up. And they said, look, we've got another 6 months of this backlog coming through the economy because there's a short supply of labour and tradies. But they were quite concerned for the second half of this year, so the fourth quarter of the calendar year. And that was interesting to hear from Brickworks. And when I was looking at your report here with James Hardie and the building construction and just what you've said there on Reece, that makes me think, well, look at what we've got here. We already knew that sort of something was happening in the construction industry. Inflation really kicked in and interest rates started dropping. James Hardie continued that downward leg. It's still sort of hasn't come down as much, so maybe a false break or maybe it's a bit extreme. But is this fitting into the same thing as Reece? Maybe it's rounding a bottom and it's looking 6 to 9 months ahead of that cycle where we sort of maybe bottom out late this year?
Yeah, no, I agree 100%, Chris. I mean, see that first leg down is pretty impulsive, and then we start to level out a bit more. So we're sort of going down at a much slower rate, and then we sort of go to a new low there. Again, a bit like the sort of Wyckoff sort of theory here. Then we bounce out of that range, have a pretty decent bounce, actually break above that sort of range there. I sort of view, anything with sort of 3 touches there, trend line, that's giving a bit of validity to it. Anything less than that, it's probably not so much validity. So, the fact that we did pop our head out of that, and actually with some okay volume sort of popping out there, and then we're sort of easing back here as well. So the volumes haven't been as light on the pullback. That's probably what you'd like to see here, but it is a pretty messy sort of choppy period here as well. Bit of a, lots going on in the market there. So, day by day positioning almost. But yeah, the thing is there, that's sort of just pull back along that trend trend line. And also, again, we've sort of gone up, 1, 2, 3, 4, 5 strong weeks up, maybe the 6 weeks inside. Then we're sort of 1, 2, 3, 4, 5, 6, and we've pulled back the same amount of time now, and we haven't even come back probably half of that range. So again, we're starting to struggle to actually go down. Whereas throughout this whole period, we've basically we've found it easy to go down. Basically, we've rallied up and then we go down really quickly. Any sort of counter moves, and we get knocked for 6 straight away on the way down. So it's the first time the stock's actually struggling to go down. So a bit of a change in character. And that's why I sort of think we actually sort of need to be looking at these sort of sectors as well, just because again, we could be potentially 6 months away from the low in the sector. All the doom and gloom, all the worst might be behind us. And then, as you say, that sort of lag there, Chris, that's probably, it's quite true in a way, because they don't know. So, and the market doesn't know as well. The market's just presuming we're going to get a recession, going to slow down. But they've been saying that for the last 12 months, Chris. And yet the data remains quite positive here. And if you've got a 6 month sort of wait list here, I tried to get someone to come and do something here for me, just to put some blinds up here. And I've got to wait a week and a half just for them to come out and quote the thing. So that tells me it's still pretty, the tradesmen are still pretty busy out there. So, but yeah, I don't know, I just think sometimes I just think this is a sector to be looking seriously at the moment. I sort of haven't bought anything in this sector, but I'm just sort of identified it here as sort of something that there's a bit of a change of character in the charts, and yeah, we might be, just if history's any guide there, this is usually the point where things can sort of turn, be close to turn around here. And that next chart there, the Lease, again, I'm not advocating buying Lease here. I haven't bought any Lease, but that is down the bottom of the big technical range there, big sort of descending wedge. Starting to see signs of a bit of a reversal down here as well. Starting to see a little bit of a fight off the bottom of the range, as we've seen. We've seen it probably 3 or 4 times here now. So plenty of touches of that trend line as well. Just starting to see exhaustive sort of style behaviour. The volume has definitely elevated here the last 3 or 4 weeks. That is sort of signs of accumulation occurring at the lows as well. So we're just starting to see the type of, that change of character in the trend, starting to see, so yeah, we don't want to be just buying lows here. We definitely want to be sort of seeing a high low setup here, but yeah, it's starting to feel like we're pretty close here. I think we could be 6 months away from a bit of a low in this housing cycle. You're already starting to see the house prices already start to recover in Australia, which, probably surprising a few. The fact that we've sort of the last few months sort of house prices are sort of stabilised and starting to improve. But, maybe it's, maybe there's more pain to come. I don't know, but just interesting. We're sort of seeing some stabilisation there.
Well, we move into another group, which is Endeavour Group. This reminds me going back a couple of months when you first started talking about them. So we look on this chart, we can see it's been coming down. You've got the lower highs highlighted. But I recall, if we look at the timetable here, this is when inflation started to kick in and interest rates were going up, and people were concerned about earnings and said, well, where do we know Australians still shop? They still shop. They still buy alcohol, and that boded well for them. As inflation has still been running, but interest rates have been kicking in, we know that there's been significant drops and coming down. There's sort of this downward trend that you've highlighted here with lower highs. What catches my eye here on your chart and what you've highlighted is, again, this green wedge. So what's happening in this bit here? What's caught your eye to put it on your report this week?
Yeah, it's also the IPO trade there too, Chris, as well. We sort of see, some of these IPOs when I know this is really a sort of spin-off, not really a true IPO there, but it still sort of followed the IPO sort of pattern there. Sometimes they can sort of come out of the gates and go really well. Everyone gets pretty excited there, and then the news sort of flow eventually will sort of start to dry up, and then that's when the price goes through a bit of a corrective phase, and then probably all the excitement starts to sort of come out of it, and lose a bit of, lose some of its luster there. So technically we've got a series of lower highs. That's still sort of negative, but and we definitely saw some volume come off that last lower high, which again is a negative. But we have sort of through that sort of churn there, through that little descending wedge there, we started to see volume sort of dry up in there. But more often, the price action didn't really get going to the downside. So although we've sort of come off a bit of a lower high there, again, we just didn't see any follow through. So actually with price action just started to tighten up here, and now we've sort of popped up here. And we did see a little bit of volume come in at the lows as well there. So I saw a little bit of accumulation volume there. So still not out of the woods yet. Obviously still haven't broken a swing high here, but just thought, yeah, this looks short term. This looks like it, wants to pop out of this band, which it has. And that means it should sort of go for a bit of a run here. Ideally, longer term, we want to sort of see it break a swing high, do some building, put in a few high lows. But short term wise, this looks pretty encouraging there. It's just a sort of stock that I quite like. But yeah, just seeing some early stages there of potentially a bit of a pop here.
Well, another one outside of the construction industry, we go to Collins Foods, obviously in the food side of things. When we're looking at this chart, I note that you've put on here these blue lines, which are the fib levels. So what's critical on these fib levels?
It doesn't actually sort of show that it's actually come back to the 2/3 of the range. So it's come back 66%. It's actually where that low has been found, which is the other sort of popular, sometimes the third and the quarters and stuff of the range is sort of what Gann used to look at. So that is a bit of a level there. But yeah, I guess, again, it's sort of some of these stocks that sort of did pretty well through COVID, they just got a little bit overheated, Chris. And yeah, it's probably got too far ahead of themselves, and then now it's had a pretty big correction there. So that's come back 2/3 of the range. It's a pretty large correction there for something which is probably not typically a big mover. So Collins Food, KFC and stuff is normally doesn't have those big moves up, but doesn't normally have those big moves down as well. So I think it's had a pretty decent decline here. Big sort of ABC comeback. Anything that sort of comes back past the 61.8 for me is a pretty decent correction. Like anytime you saw the banks come off 2/3 of their price there, you just don't see that very often, So, but we saw a little bit of volume off that last rally. Goes back at the 50%, has a bit of a pullback there. But the first few weeks of that sort of sell-off there's no volume in it. So even though it's sort of looking a little negative, just didn't see any follow through. And the last couple of weeks, we actually saw some volume come in there. So to me, this looks like actually wants to go up here in the short term. So again, not maybe not the most awesome signal here at the moment, but definitely one that looks like it wants to sort of go back towards $10 there. And look, this might sort of go, rally back to 10, might come back, retest the sort of 750 zone again, put another, maybe go back a range again, build, and then eventually, turn around. So definitely a bit of a slow moving market here, but we're just looking for the sort of maybe the stocks that are sort of holding up, the best here. So I think obviously Reece is probably one that looks quite good. There's a few others that have held up pretty well, but yeah. Well, Temple Webster is a little different. It actually has come back to retest the low, which is oftentimes not a sign of strength, but sometimes they can sort of do it in has taken quite a while to get there. So I know the last little leg has only been about 6-7 weeks down, but it did go sideways pretty much for probably twice as long as it rallied there. So from the July up to the sort of September high, that was pretty quick. And then since then, it's really grind. It's gone sideways and then had this, retest the low again. Just like the fact that we've seen a bit of volume come in the last week or two as well. And yeah, so it just might just go through a bit of a building process here. So again, not the best trade here. But yeah, just a sort of stock that I think, we've seen that these stocks can sort of move from sort of 3 to 6 pretty quickly. But yeah, it's just a stock that I'll definitely put on my radar here, just because it sort of has come back to retest the low. Just starting to see some volume, come in at those sort of lower levels. I like the fact that this is not, apart from the first leg down, this last leg down here, that's really taken a long time to get down there. So this is what I consider an overlapping market as well. So the whole thing is overlapped here for the whole period. and then it's finally sort of broken down and retested the low here. So the fact that it's gone from September to March, so 9 months, and it took 3 months to go up, that I like that. So it's taken 3 times as long to go back and retest the low. So so just again, just put this one on the radar here. We watch the daily there and see if we see if it doesn't sort of give us a better setup in there. But definitely should be on the radar there.
Well, there's some great shares to take into the week for trading shares to have on the list. And importantly, as you mentioned, note that change of character. So we're going to say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
And Gary mentioned a few things. And what we do is monitor the relative strength of leading and momentum shares. That's on the Friday report. That's on the right-hand side of the screen at the end. And then there's also trading strategy. He's mentioned Wyckoff, false breaks, springs, VCPs. They're all in a whole series of playlists where we've covered those in more detail on the right-hand side. And finally, if you want to follow Gary, follow his Twitter handle. That'll be on the left-hand side. Catch up with him there.